Okay, so I just wanted to rebut the main things. People saying, well, look, we've got no recession, things are going really well. Soft landing is what we've had. So the first thing why the soft landing thing is a load of rubbish. One, jobs showing very strong. The only reason is huge amount of government jobs in the UK. It's just become massive in the US. The federal government is the number one employer in the world. That is clearly not what the US Constitution wanted, a big government, but that's the way it is. So a huge amount of strong government jobs funded by printing money, both in the UK, US, and that is the only way those jobs is going down. Also a massive amount of inactivity, people moving off those unemployment rosters into inactivity, mental health issues. It's a scam, it's not true, and basically there's not been any significant change in employment figures, the amount of people employed. Secondly, stock market boom. Stock market S&P is up 20% in this year. Fantastic, right? Yeah, it's only driven by 7 stocks. The FANGs, they are just doing share buybacks, so it's not even real people. It's just the companies themselves buying back their own shares. So they're using their excessive earnings to buy back their own shares and artificially inflating the value of their shares. That is what's driving it, and that's why the FTSE in the UK has gone down. Europe also gone down. And it's just the American stock markets where, because you have these FANGs monopolies who have excess monopoly profits, and they're channeling it back into their shares, so therefore it goes up. But once those dry up, and as we can see, people are finding it, struggling it much harder. Things are getting much tougher out there, so those excess profits will go down. Third thing I'm seeing, RRP, which is a reverse repo, which I've told you for many months now, that is the signal of when things are giving up. Finally, it peaked at 2.2 trillion a few months ago. It was at 2 trillion in my last video 1 month. It is now at 1.7, and tomorrow we'll get a new number. I think it could even be 1.6, so that's a huge difference. Still lots of 1.6 trillion there in the background to stop any liquidity or the actual recession hitting, but as you can see, it's coming down very quickly. Once that's depleted, things will happen. Fourth thing, after the debt ceiling has gone down, the US government borrowed $850 billion in a month. Yeah, that's how much they borrowed. So obscene insanity of borrowing binge, and that's because they have to service their 32 trillion debt. They have to pay for the stupid Inflation Reduction Act. It's gone crazy. So the US has literally gone, they've added fuel to the fire. They are borrowing even more than they've ever borrowed. It is eye-watering levels of borrowing. At the same time, China is dumping all their US treasuries, as well as Japan, actually. Japan went from 1.2 trillion, they're now at 1 trillion, and China went from about 980 billion, they're now at about 800 billion and going lower. And the reason is, contrary to what they say to you, because China is to deflect, it's because China is in an utter crisis. Absolute hell out there in China. Companies moving out, obviously, because the US, Foxconn packing up and going to Vietnam and India. Shopping malls are empty. Demand has faded. Youth unemployment at record high. Things in China are really bad, and obviously it's all a consequence from the real estate Ponzi scheme bubble. People thought they were richer, borrowing against it, and obviously it's not there. And those property companies are, Evergrande, I think it was 80 billion or something crazy of losses. So things are extremely bad in China, hence the deflation. That is impacting the US being propped up by massive government spending, government jobs, and just fake money printing. In the end, no one cares about that. It just causes more inflation. Useless. We can see that in the inverted treasury yields. So inverted treasury yields, meaning the 2-year yield is above the 10-year. So the 2-year yield is at 4.8%, the 10-year is at 3.8%. That should not be happening. And 4.8% is already suggesting to you, 4.8%. And that is suggesting to you that they do believe the Fed is going to cut rates within 2 years. Obviously, it's at 5.25, with 90% people expecting it'll rise to 5.5 at their next meeting. So 5.5, 4.8. People are expecting the Fed will cut by then, and that means recession, basically. And 10-year being at 3.8 means severe recession. So yeah, that's what's happening. I would go and buy all those bonds at 5.25 because that is unbelievable returns. You're not going to get that very long. And so all I can say is let's take away the fake numbers, the fake unemployment numbers, the fake inflation stats, the fake stock market boom. And if you undercover all that, you will see people are really suffering, and we're the middle class being wiped out, small businesses being wiped out. In the end, we get to the totalitarian left-wing dream, only big business and government. So the poor will be dependent on the government, big business, the rich in total control.